Today we are going to solve October 2023 paper question number 6. Casey had prepared a trial balance on 30th September 2023. Although the totals of the trial balance failed to agree, he did proceed to calculate a draft profit for the year of £7,900. On further inspection of his book of accounts, he found the following errors had been made. So there are 5 errors listed. So let's start with the first question. 6a, explain how the following errors occurred. First one is an error of original entry. So an error of original entry means you are entering an incorrect value of transaction which is going to be recorded in the books of prime entry. So this will result in debit and the credit values in the ledger to be totally wrong. For example, a goods worth the sale of £200 was entered in the books as £250. This is called as error of original entry. Error of principal. Here one of the entries which is of the correct value of a transaction, it is recorded in the incorrect account class. Okay, it is incorrect account which is different, which is in a different class of the ledger. For example, a motor vehicle expenses had been debited to the motor vehicles account, which is an asset account. So this is called as principal error. Now prepare the journal entries to correct the errors. Errors from 1 to 5. Narratives are not required. First one is Elena, a credit customer of Casey, had returned goods costing $520 as damage. No entries had been made in the books of account. So if this is an entry of omission, so you will have to enter correctly in the double entry. One is going to be the one of the account is going to be the sales return. Okay, sales return account, and the other one is the trade receivables KC account. So here we have to update both of them. So first one, sales return 520 debit, and KC account 520 credit. Okay. Then you have drawings of 450 had been posted to wages account. So these two had to be rectified. One is the drawings, okay, and the other one is wages. So in the wages account, it is an expense account. It would have been entered on the debit side. So you will have to remove the entry by entering on the credit side. So 450, and drawings you will have to enter on the debit side correctly. Then a commission receivable 250 had been correctly entered in the cash book and had been debited to the commission receivable account. So commission receivable account is a income account. Okay, so now it has been entered on the debit and credit entry has been reversal entry. So you will have to correct it properly. So first one is you will have to remove 250. Okay, you will have to remove 250. It had been debited, so it should have been entered on the credit side. So first you will remove this 250, and also you have to enter the correct amount. So that is equal to 500. So your entry is going to be equal to 250 plus 250, 500. Okay, which is needs to be entered on the credit side. Okay, so and the subsequent account, okay, there is no subsequent related because cash book it has been entered correctly. So suspense account is created. So suspense account, it is entered on the debit side. Okay, 500 it is transferred. Now next one is an insurance premium of 105 had been correctly entered in the account of Pearson Insurance, but it had been recorded as 150 in the insurance account. So let's correct it. There is a difference of 45. Okay, insurance is an expense account. So incorrect figure has been entered. So insurance, okay, account, it's a it has been entered as 150. It would have been entered on the debit side. So you will have to reduce it. So you will enter on the opposite side 45. Okay, 150 minus 105. Okay, that's the value you are going to enter. So 150 150 minus 105, okay, is a correction you would have made, and the other account is a suspense account you will enter, because it's just you will, it is only one account which is going to get affected. And okay, or you can also affect the, we can pass it on this to the profit loss statement also. So now let's put it in the suspense. In the meanwhile, an irrecoverable debt of 720 had been correctly recorded in the account of Cellini, but no entry had been made. So irrecoverable debt account is the only one account which needs to be corrected. So it is 720, and its subsequent suspense account is updated. Okay, it is because there is no double entry correction, so we'll open temporarily a suspense account and enter this. So these are the journal entry correction. Next, prepare the suspense account showing the original difference in the trial balance. So let's start with that. So the first one is, okay, whatever is on this side we just enter on the same side. So irrecoverable debt, it is 720 on the credit side. So irrecoverable debt, okay, on the credit side was 720. And then we have, okay, on the debit side we have the insurance. Okay, on the debit side we have the insurance. Insurance, which is 45. And then you have the commission receivable, which is on the debit side 500. Now we have the difference. Okay, so the difference, let's adjust as the trial balance. We still see that on the credit side there is a huge difference. Okay, the credit side, the total is more, so it is at 720. So the total has to be the same on both the sides. So 720 minus 500 minus 45. So the difference in trial balance is going to be equal to 175. Then next one is calculate the revised profit for the year ended 30th September 2023 after the correction of all the errors. So the draft profit is given as 7,900. Now first one is, okay, we will have to so any wages, okay, any decrease in wages and stuff like that, increase in income, decrease in wages, decrease in expense, and decrease in expense, okay, it's going to be added to the profit. So we can see that here. So let's write what are the increase in, okay, let's write what is the increase in expenses. So we can see that wages, okay, there is a decrease in expense by 450. So let's write here. So decrease in wages, drawings are not going to affect the profit. Then commission receivable, it's on the credit, so it is affecting the profit by 50. It's an increase in income. And insurance, okay, insurance, we have to reduce the insurance by 45. Okay, so that's an increase in profit, so 45. And then, okay, so let's add up these. So these add up to 995. Okay, now let's if you want, let's adjust first. Okay, let's add up this value. So it is going to be 8,895. So 8,895, and then minus the sales return. Okay, so the sales return is going to reduce the profit. So sales return is going to be 520. So 520, and then irrecoverable debt. Okay, it's going to increase the expense by 720. So 720, and so we have to subtract these two. So let's add up first these two. 720 plus 520 is 1240, 1240, and then so let's subtract this from the and get the revised profit. So 8,895 minus 1,240, it is 7,655, 7,655. This is the revised profit for the year. Then evaluate whether KC should calculate a draft profit when it is known that there are errors in the books. So if she is able to calculate, okay, the error, it helps her to give an estimate, profit estimate. Although not completely accurate, it provides just at least an estimate of the profit which has been made or to be made. And it aids in decision making, like decisions may be needed to taken, therefore any information might be helpful. For example, either she can make a decision to cut costs or increase costs. However, what are the negative points for preparing a draft profit is it might lead to incorrect profit estimate. So when when there are errors in the books, the profit could substantially be different in reality. So we can see that the real profit was 7,655, whereas her estimate was 7,900. And so incorrect decision making may be made. In conclusion, it is negative to calculate a